Welcome back to the Deep Dive. Today, we're really unpacking something fundamental. Essential property insurance. Homeowners, renters, auto. The policies that, well, you hope you never need, but are crucial.
Absolutely.
Our goal today, cut through the jargon, pull out the key stuff, so you really understand these financial shields. You might be surprised by some of what we cover.
It's true. And what's fascinating, I think, is how often people underestimate the actual financial risk involved with their property.
I know.
Your home, your car, your belongings, the potential loss or liability. It's huge. People think, oh, I have a policy, I'm good. But knowing the specifics and the gaps, that's essential. They all share that same core purpose, though, protecting you financially.
Protecting you from that one event that could just derail everything.
Exactly.
Okay, so let's start with the biggest asset for many people.
Oh.
The home. Homeowners insurance. It's not just smart. It's usually required if you have a mortgage.
Almost always. Lenders insist.
And our sources break it down into like 4 main parts. The dwelling, personal stuff, liability, and additional living expenses. Let's start with the dwelling, the actual structure.
Right. The house itself.
So dwelling coverage. This pays to repair or rebuild the physical house if it's damaged by what they call covered perils.
Yes, covered perils. Think fire, lightning, wind, hail. The common disasters.
Okay, so like if a kitchen fire does, say, 50 grand in damage.
That's what dwelling coverage is for, yeah.
Okay.
Minus your deductible, of course.
And it's not just the main house, right?
Good point. No, it usually covers other structures too, like an attached garage, maybe a detached shed, even fences. Often it's a percentage of the main dwelling coverage.
Okay.
And this is really critical. Standard policies do not cover floods or earthquakes.
The big exclusions.
Exactly. If you're in an area prone to those, you absolutely need separate policies. Connecting this to the bigger picture, it just shows you can't assume you're covered for everything.
You need to know the details.
You do. And you need enough coverage to completely rebuild. Think about today's construction costs in your area. An agent can help estimate that.
Super important. Okay, so the house structure is covered. What about all the stuff inside? Furniture, electronics, clothes?
That's personal belongings coverage. It protects your stuff if it's stolen or destroyed in a covered event, fire, burglary, that kind of thing.
And how much coverage is typical for that?
Usually it's a percentage of your dwelling coverage, maybe 50, up to 70% often.
Okay, and here's something I found surprising. This coverage often works anywhere.
Yes, that's a detail many people miss. Your stuff is often covered worldwide.
So laptop stolen on vacation, covered. Storage unit fire.
Potentially, yes. Within the policy limits, it can cover those situations. It's a great benefit.
Wow. But there's a catch for expensive items, right? Like jewelry.
Absolutely. Standard limits on high-value things like jewelry, art, collectibles are usually quite low, maybe $1,500 for all stolen jewelry, for example.
Ouch. Not enough if you have valuable pieces.
Not at all. That's why you need a personal articles floater or endorsement for those items. It specifically lists and insures them for their appraised value.
Like a special add-on.
Exactly. And a practical tip, keep a home inventory. List, photos, video, whatever works makes claims so much easier.
Good advice. Okay, next pillar, and I think this one's really underestimated. Liability protection.
Hugely important.
This protects you if you're legally responsible for hurting someone or damaging their property, on or off your property even.
That's right, both. Think about a visitor slipping on your steps.
Or your dog biting someone.
Or your kid breaking a neighbor's window with a baseball. Liability covers the other person's medical bills, repairs, and critically, your legal defense if they sue you.
Legal fees alone can be massive.
Astronomical. Standard limits might start around $100,000, but honestly,
go higher.
Definitely.
Right.
For a relatively small increase in cost, bumping that up to $300,000 or $500,000 gives so much more peace of mind. A serious accident can blow past $100K easily.
And put your own assets at risk.
Precisely. If you have significant assets, an umbrella policy adds even more protection on top. Oh, and there's usually a small medical payments to others coverage, too.
Right, like a no-fault thing for small injuries.
Exactly. Usually $1,000 to $5,000. It can help settle minor guest injuries quickly, maybe avoid a lawsuit.
All right.
It really raises the question, doesn't it? We focus on protecting our stuff, but liability risk can be financially devastating. Higher limits are just prudent.
Yeah, it's like protecting your entire financial future. Okay, last one for homeowners. Additional living expenses, or ALE.
Right, ALE.
This kicks in if your house is unlivable after a covered disaster, right? Like during repairs after a fire.
Exactly. It pays the extra costs of living somewhere else temporarily.
So hotel bills, maybe temporary rent.
Yes, restaurant meals above your normal budget, laundry costs, necessary expenses while you're displaced.
That's huge. So you're not paying double mortgage plus rent somewhere else.
Correct. It prevents that double hit. There are limits, of course, maybe a time limit like 12 or 24 months or a percentage of dwelling coverage, but it's separate from the money to rebuild the house itself.
Good to know. So wrapping up homeowners protects your biggest asset, shields from lawsuits, often required but smart even if the house is paid off, and review it annually.
Definitely review annually. Costs change, your life changes.
Okay, let's switch gears. Renters. Big misconception here, right? People think the landlord's insurance covers their stuff.
Huge misconception.
Yeah.
And a dangerous one. The landlord's policy covers the building, period.
Not your furniture, not your laptop.
Nope. And not your liability if you, say, accidentally cause a fire that damages other units.
Oof, that's where renter's insurance comes in. And it's surprisingly cheap.
Incredibly affordable, often $10, $20 a month. It's really a no-brainer, and it mirrors homeowners in many ways, covers your stuff, liability, and additional living expenses.
So the personal property part for renters protects furniture, electronics, clothes from fire, theft, vandalism.
Just like homeowners, yes. Break-in, kitchen fire. Renter's insurance helps replace your damaged or stolen belongings.
And that anywhere in the world, coverage often applies here too.
Typically, yes. Another great, often overlooked benefit for renters.
Wow.
What's fascinating, though, is just how many renters skip this. They assume they're covered or think they don't own much. But replacing everything, it adds up fast.
Yeah, you definitely own more than you think.
And there's a key choice here. Actual cash value versus replacement cost coverage.
Explain that difference.
Okay, replacement cost pays to buy a new item similar to the one destroyed. Actual cash value pays what the old item was worth, considering depreciation.
So replacement cost gets you a new couch, ECV gets you maybe enough for a used one?
Pretty much. Replacement cost is usually better, even if it costs a little more. And renters do that inventory too.
Good call. Okay, liability for renters, same idea as homeowners.
Identical concept. Protects you if you're liable for injury or property damage.
Like that kitchen fire damaging other units.
Or a guest slipping in your apartment, your dog biting someone at the park, even accidentally breaking something expensive at a friend's place. It covers damages, medical bills, legal defense.
Still starts around $100K usually.
Typically, yes, and you can usually increase it.
And additional living expenses for renters if your apartment becomes unlivable.
Same deal. If a covered event forces you out, it pays for temporary housing, extra food costs, etc., keeps you from paying double rent or living somewhere unsafe.
Man, renter's insurance seems essential. Recovering from losing everything, protection from lawsuits.
Absolutely. And more landlords are requiring it now, too.
Think about a pipe bursting upstairs, ruining all your stuff. Landlord fixes the building, but your stuff? That's on you, unless you have renter's insurance.
It's such low cost for such significant protection. Truly a no-brainer.
Okay, let's hit the road. Auto insurance. Vital stuff.
Can't drive without it, practically.
Yeah, it's mandatory almost everywhere. New Hampshire's the odd one out, but even they require proof you can pay if you cause an accident.
Yeah.
Driving uninsured. Huge penalties.
Fines, license suspension.
And worse, massive personal liability if you cause an accident. We're talking potentially hundreds of thousands in costs you'd be personally responsible for.
Definitely not a risk worth taking.
So the core of auto insurance, the part required by law, is liability coverage.
Correct. This pays for damage or injuries to others when you cause the accident.
Split into two parts.
Right. Property damage liability fixes the other person's car, and bodily injury liability pays their medical bills.
State minimums. I see numbers like 2550205. What's that mean?
Okay, so 255025 means $25,000 per person for injuries, maps $50,000 total for injuries per accident, and $25,000 for property damage.
That sounds low.
It is low. This raises that critical point again. State minimums are often dangerously inadequate for a serious crash.
So you need more.
Absolutely. Carrying higher limits like $100, $300, $100 K per person, $300 per accident for injury, $100 K property damage, or even more is crucial to protect your assets. If damages exceed your limits, you pay the rest.
Out of pocket, wiping out savings.
Potentially, yes. Plus, liability covers your legal defense if you're sued. Another huge benefit.
Okay, so that covers others. What about damage to my car?
That's where collision coverage comes in. It pays to repair or replace your car after a collision hitting another car, a tree, a pole, whatever.
Whether it's your fault or not.
It pays if you're at fault or if the other driver is uninsured or underinsured, you pay a deductible first.
And lenders usually require this if you have a car loan.
Almost always, yes. If you have a loan or lease, they'll require collision.
Okay, then there's comprehensive coverage, sometimes called comp.
Right. Or other than collision. This covers damage from things other than crashes.
Like what?
Theft, vandalism, fire, floods, hail, hitting a deer, a tree branch falling on your car.
Bad luck stuff.
Basically, yes. It usually has a deductible too, and lenders typically require it for finance cars as well. It tends to be cheaper than collision.
So collision and comp together cover most physical damage to your car.
They do. They work as a team to cover different kinds of incidents.
Got it. What about uninsured or underinsured motorist coverage? UMUIM.
Super important. This protects you if you're hit by someone with no insurance or not enough insurance to cover your bills.
So it pays your medical bills, maybe car damage.
Exactly. It covers costs the at-fault driver should have paid but couldn't. Requirements vary by state, but highly recommended everywhere. Too many uninsured drivers out there.
Scary. Okay, then there's PIP or MedPay.
Right. Personal injury protection or medical payments. These cover your medical expenses and your passengers, regardless of who caused the accident.
PIP is for no-fault states.
Yes, required in no-fault states. Covers medical bills, often lost wages, rehab costs. MedPay is usually a smaller, similar medical benefit available in other states.
And briefly, there are other add-ons too.
Yeah, things like towing roadside assistance, rental car coverage while yours is repaired, and gap insurance.
Gap seems important for new cars with loans, right? Because they depreciate so fast.
Very important. It covers the gap between what you owe on the loan and the car's actual cash value if it's totaled. Prevents being underwater on the loan.
So bottom line for auto insurance, accidents are crazy expensive.
Yeah.
Liability protects you from potentially ruinous costs and lawsuits.
Mm-hmm.
Collision comp fix your car. And it's legally required.
Can't skip it.
Practical tip. Check those liability limits, make sure they protect your assets, maybe drop collision comp on a really old low-value car to save cash.
But never skimp on liability. That's the absolute bedrock.
Definitely. So what does this all boil down to for you, our listener? We've gone through homeowners, renters, auto. These are essential layers of protection.
They really are.
Understanding them isn't just about ticking a box. It's about real financial peace of mind. Knowing you're covered, knowing what's not covered.
And how they all kind of work together to protect different parts of your financial life. We've seen so many areas where people are underinsured or just unaware.
Right.
It really pushes you to think beyond just having insurance, doesn't it? It's about understanding it. Which leads me to, I guess, a final thought for you to chew on.
Okay.
How often do you actually review your policies? Like, really look at them? Are you sure your coverage limits still make sense for your assets, your potential risks today? Or are you just rolling over old assumptions?
Ooh, that's a good one. Because things change. Construction costs go up, you buy new things, maybe your financial situation changes. Are those old assumptions leaving you exposed?
That's the question to ask yourself.
Powerful thought. Because our lives are constantly changing. Well, thank you for joining us on this deep dive into essential insurance.
My pleasure.
We hope you take this info, maybe dust off those policies, and ask some good questions. Stay curious, stay informed, and we'll catch you on the next deep dive.